Hi, I'm Brendan Mills and welcome to episode 7 of Finance Coach TV, you and your business's finance coach. So in episode 6 we looked at what an asset is for a business and we looked at examples of tangible assets. So just a quick revisit, an asset for a business is something that they own or control. So they have complete control of what the asset does and where it's allocated to. It can be utilized in the business, so it can do something for the business, such as a vehicle or a truck, or it can be converted into cash, like for example, people who owe us money, or basic one, cash in the bank. It has positive economic value, so it's worth more than $0. It's not a debt or an obligation to somebody. And it can be tangible or intangible. So in the last episode, we looked at tangible assets, and today we're going to look at some intangible assets that you could find on your balance sheet, either in your business or in another business you might be analysing. So we'll go through a few examples here. So the first one is trademarks. So a trademark, we're all familiar with them, the Coca-Cola brand, the Apple brand, the Nike tick. All those sorts of things have a huge economic value to them. And if you were to read one of their financial reports, you'll see that Coca-Cola has a huge amount of value placed on their trademarks. Because imagine if someone gave you the Coca-Cola trademark to use as you wished tomorrow. You could make a lot of money using that trademark. So there's a value to that. So even though it's intangible and you can't feel it and touch it, that's something that you can use at your disposal and make money from. But it doesn't necessarily have to be a big company. It can be a company, a small, medium-sized enterprise like your own, or one that you're aspiring to build. So you can have a trademark within that, whether it's a slogan or a saying or the business name itself. There's actually some value behind that as well, and that can be something that's on your balance sheet. So if you pay for a trademark, that becomes an asset of your business. The next thing is a license. So a license being, an ability to do something in a certain area more often than not. So for example, imagine if you had the Apple license for your state or your city. There's significant value for that because every person who wants an Apple product needs to go to your store or to your website to purchase it. So again, they've got a value to them. So you would have paid a price for those licenses, and again, they're an asset to your business because that helps you, generate funds for your business and generate revenue for it. Patents. So again, something of knowledge, something of know-how, a way of doing things. So again, a lot of the technology that we use today has a patent around it, or research and development that your business might do. Again, apply for patents. They cost money, but they're also an asset to your business because we're going to be using those to hopefully generate more revenue and more profit for your business. Goodwill. Goodwill is something that you'll see on a business's balance sheet if it's purchased other businesses, generally speaking. And the goodwill, without getting into too much of the technical know-how, is how much you've paid for the business in excess of the value of its assets. So for example, again, using the Coca-Cola example, Coca-Cola is worth far more than the assets itself that the business has. So if someone was to buy Coca-Cola, it would cost a lot of money first of all, but if they were to buy it, they're going to pay a lot more than what the assets are for the business. So that difference between what the assets of the business are and the purchase price is what they consider the goodwill. So if you see that in a business that you deal with the goodwill, there's more often than not that business has been involved in a transaction of some sort of purchasing a business. And formation costs. This is one I think every business will have at some stage in their business life. And the formation cost is getting the business set up. So whether it's setting up the company, setting up a trust, getting the business names, part of, as the name suggests, forming the business. So those costs are also considered an asset to the business because you need to have them to generate, to run your business. So a really important point to note on these examples of intangible assets is that they could either be shown at cost or at market rate on the balance sheet, depending on what happens. Now, in most small, medium-sized businesses, these intangible assets will be shown at cost. So because your financials are used for private purposes, there's not a valuation placed on the intangibles. But a big company like your Coca-Colas and Apples, they get their intangible assets valued the same way you would value a property or tangible assets. So it's really important for the market to understand how much they're worth. So if you were to sell your business one day, and let's say you had some really good license agreements, they would be worth far more than what you paid for them, say, for example, if you bought them 10 years ago. So that's something to consider when you look at it. So those intangibles may be worth a lot more than what they're actually showing on the balance sheet. So from today's session, go away, look at your balance sheet, see if there's anything intangible on there and whether there's anything of value, because your business might be worth actually a lot more than what it's saying on the balance sheet because of those intangibles. Hope you enjoyed the episode and look forward to seeing you again very soon.